All right. Good morning. Good morning. So today is really a continuation of the global markets. There's been a couple of really nerdy articles that have come out on liquidity draws, and it seems to be the next looming threat. It's a little too in-depth and nerdy to dig through, but it basically comes down to the idea that this run that we're having in the market has a threat to it due to treasury and auctions and the liquidity draws. And you can't see that in the chart. So, when you're looking at your Amazon or your Tesla or whatever and trying to determine what you should do with that trade, the threat that is out there isn't in those candles for you to be able to recognize. They did mention a little bit on Finance Juice about how tech really loves low rates. They're addicted to borrowing, and that these higher rates will stop the momentum. And there is a threat of the 10-year right now exploding to the upside. And if we were to get something like that, it would absolutely kill the one thing that's holding this market up, which is this mega market cap rally, right? I'm sure by now most of you have heard that it's 5 to 7 names that is carrying this market. And if those 5 or 7 names were to quit doing all the heavy lifting, there's a really big question. Could the other 95 names or 2,500 names, could they get the work done? Could they continue to hold the market up? Today, however, right, just to bring it all back into focus, today is more about global markets, the things that are going on in the European Central Union and then Canada. So for today, those are going to be the ones that you want to focus on. And then tonight, it'll be Japan. It's always Japan. To get a better look at that, FX Street is a really good place to go. I like using these two combined. Right here at FX Street, you can kind of get the impact anticipation. These darker bars kind of highlight where a potential threat is historically. And then on Finance Juice, if there are speakers or other ancillary events, you'll often find them here. So I like kind of putting both of those together. Just keep in mind, when you're looking for what could be on the table today, you do want to check multiple places. The more the better. 3, 4 places, including something like Thinkorswim, which it would help if I logged into. I was having an issue with my mouse without borders this morning and spent the last hour fixing that. It's always something. Microsoft Power Toys has now built in mouse without borders, by the way, in their new update. So pretty cool if you use Power Toys. And if you don't know what I'm talking about, don't worry, you're not missing anything. $8:30, 10, 10:33, and then tonight with Japan. Now, this consumer credit, it's not generally that bad, right? And to just kind of back that statement up, we can come over to the economic calendar and we can look back and say, okay, well, where's this 3 o'clock impact? Consumer credit It's really low. Now, that doesn't mean that it couldn't cause some issue, right? That there couldn't be, say, some kind of surprise or a number that comes out that shocks the market. It's absolutely possible. I don't think so, right? So it gets us right into power hour anyways. And, trading in power hours usually reserved for gamblers and professionals. So if you're one of those two, trading in the power hour makes perfect sense. Otherwise, you probably want to avoid it, right? You're either providing liquidity or you are taking liquidity. More often than not, you want to be the one taking liquidity. All right, US dollar China topped out again. You can see all those wicks, those indications here where we just can't get through the zone. And the thing is, we were saying the same thing back here, right? When we just couldn't get through this zone. And then we finally powered through it. And now we've got this. So is it a topping pattern? Yeah, but that doesn't mean it's going to stop, right? So after a nice run like this, it's healthy to digest. It's what we want to see. The recovery from Friday the 2nd, that was a really strong recovery. And I don't think it's done yet here either. The thing is, we don't have to guess or assume. We've got a very clearly defined range set. All we got to do is let it break the range and run it. Now, if you're not trading FX, it doesn't matter. You're still going to want to keep your eye on this thing. It will impact everything else. So a breakout and expansion higher here, or a breakdown and we get below that pin bar and start heading to the downside with a target to at least back to 7. We have a pivot point here around 725. I think that'd be a significant level to kind of keep your eye on. So what I just did right there is I overlaid the S&P. It's not as clean as I would have liked it. Nah, it's not really helpful for us today. I'll have to find another way to do it. Maybe on Thinkorswim where it's not so, where I have more control. So the main thing right now is that we have an inside day and we are IX10 at this point. So we need to get out of this range one way or the other. And as long as we're stalled here, we're going to be stalled in a lot of other things and a lot of other places. US dollar Japan kind of fits into the same stall thing, but you can see this little rally base drop and then a Busby on the bottom, that 138.5. So we are IX10, but we're inside a pretty good sized candle, and it's not a lot of compression expectation inside of a large candle like that. So again, here too, we need to get out of the box. We really want to see this continue to move down in a calm fashion, right? We do need this to get off of those highs, but we don't want it to, get these extreme drastic legs down like that, right? We want a more orderly evacuation of the facility. Looking at Europe right now, they did rebound off the 50% level of the previous day, which is good. It's maintaining that bullish bias from this reversal back here. but it's got a long ways to go. It is a little bit of a head and shoulders that hasn't quite formed yet, right? We got the left shoulder head, right shoulder follow through. The measurement on the follow through still would only get us back to around the top of this range, that 7,800 area. It's more of what's Europe got going on today. They had a nice recovery. Now we got to just see that follow through, right? Get a breakout and an expansion, a bullish close in Europe would have a nice bleed over here. Take it over to the dollar. We're still holding underneath that 105.5, call it 106. We do have a significant rally-based drop back here with liquidity that has to be resolved at some point. First touch play when we get there ought to be really nice, but not today. Today, it's still going to be more about resolving this 104.5. We are inside yesterday's range, and we do continue to see these lower highs. But other than that, we really don't have anything on a daily chart on the dollar for any kind of pattern or setup other than the fact that we are inside day. So we want to see a breakdown here. It needs to be calm and orderly as well. We don't want to see things start to get out of control and get a little wild like it did back here or like it did back here. These extreme moves in the dollar, in the FX pairs, it weighs significantly upon the market, right? That's kind of what we want to avoid. We got TLT here. It's a gappy bugger. Pre-market, we are gapped up a little. You're better off maybe looking at something like ZB, ZN, ZF, TLT, and TNX. They're not bad, but you know, like the TNX, it's not even going to give you anything until we get closer to the open. Now, I mentioned earlier the 10-year and how there is a real threat to the 10-year lifting off like a rocket ship. There is a 10-year that you can watch. It's a 10-year futures, and that way you can see it, 22 hours a day. But that chart's really nasty, and you're better off watching something like the TNX. It's just not going to work for you in the Globex. But when we get into the open, that's certainly the one that you want to keep your eye on. If you have something like Stock Charts or one of those platforms or TradingView, then you can start looking at like the 2-year, the 10. The 2 is really front, right? It's really up in the front end, and that's the one that we see get the most immediate response. Usually that's the early warning tell. To kind of wrap your head around it, just think about your daily chart, your hourly chart, and then maybe like your 5-minute chart. Well, that would be your 30, your 10, and your 2 in the yields. We know that the 5-minute chart is really fast, responsive, right? Can fake you out. I like the phrase I heard recently, objects in the mirror are closer than they appear, right? Maybe zoomed in on those really tight charts, the moves look overly exaggerated. Things seem extreme. So that'd be your 2-year. All right, gold is hanging out, but it is going to be dependent on what's going on with US dollar Japan. So if we continue to see US dollar Japan fade off, then we could get that breakout in gold above 1980 and start climbing our way back up again. That's a big if, right? And same thing goes with gold miners, silver, your precious metals. So in GLD, right, we're going to be looking for a break above that 184 to maybe come back into 188, 190, just bebopping through this zone here. No real anticipation of an expansion beyond these highs, because we would really, to have that, we would have to have a significant breakdown in US dollar Japan. I don't see that coming, right? So we might get a little weakness over there, and that's going to give us a little bit of a pop here. but that is a short-term weakness there, and so it's going to be a short-term pop here. This is really setting up for a continuation as an iron condor or maybe an iron fly, something like that. The liquidity is not that bad really in gold. You kind of maybe need to take your pick, be a little picky about it. But you got GLD, GDX, and then silver. You know, the liquidity is not that bad, and the options here either. But silver's been the more quickly to respond, right? Or it feels the impact more. It seems to really give back cause and effect. The effect seems to have been hitting silver more than gold. Something to think about. All right, liquidity today is light. We're at 74. That was a little bit of a surprise when I got into the office earlier today and I seen how low it was. The line doesn't show up until right at the briefing, but just seeing how low it was earlier had me looking around trying to identify, hey, where's the threat here? Why is everybody sitting out? And it's not like we've got a really narrow range either. We had a beautiful move through the kill zone, a nice reset off of the lows. So what are they sitting out for? Where is everybody going if they're not trading here? And another thing, if you see the numbers this low, is go see who's closed, because very often while we think, oh, there must be some threat, everybody's sitting out, it often is usually nothing more complicated than there's a market closed. All right, so if Europe was closed or Asia was closed and they just weren't in here trading, we'd see that same light volume. So just because you see the light volume doesn't imply automatically that there's some threat out there. But generally, that's what it implies. There's something going on or something on deck yet that we don't know about, and we need to go look. We don't have an MDP. We've already hit it. These wicks across the lows really show or highlight that recovery and the defense from down here. Right, and it's struggled hard to finally come out of that and get back above VWAP. Now we've got this inside day breakout to the upside in the ES. Bring it over here and look at it on the daily. We've still got some area of concern from, say, the 5th. And that's going to need to be resolved. But until then, we've got an IX10 from the 5th, and we've got an inside day breakout from yesterday. I don't really see an expansion outside of that top. Not without a catalyst to give it to us. And I'm really trying to see a catalyst here, and I just don't have one. Right? We went through what's on the deck for the day, and none of those are big enough to light a fire under this market. So 4,300 is on deck if we continue this rip to the upside. The thing is, we just had this really nice bull trap. So obviously it won't be a trap if it continues to go up, but liquidity resides on the other side of the pivot. So when we come up to the pivot, we're not expecting price to stop on a dime and turn around right at that pivot. That's not what pivots are for, right? It's not even how we want to approach them as a trade. Liquidity resides on the other side of the pivot. So when we came up to that level, we had every expectation of going through it, to getting into the other side first, whether we were going to reject and come back down or whether we were going to just go through it and keep going to the upside. Either way, it needed to get through the pivot being yesterday's high. Once we got through yesterday's high, then we have our own Globex high. We managed to do that. If that's a nice bull trap, then we ought to see, the weakness get us back to, say, the Globex open. And by then, the bulls are going to really just start to puke their position out, and you should get a strong drive to the downside back to VWAP. So 42.80, what? 42.88. Oh yeah. Otherwise, if it's not a bull trap, then we're going to focus on getting back to Monday's high. Now, when I stay zoomed out like this and we can kind of see what's going on, you can see Friday, Monday, Tuesday, we're just building up into this. And this is where that IX10 comes in. That is our range. And the longer we stay in this range, the more of a threat everything becomes. Right? Just kind of think about it in a generic term. Where's all the stops? Shorts would have their stops up here. Longs would have their stops down here. Liquidity just starts building and building and building and building on each side. And all of this is just winding up more and more and more pressure until finally something pops. It is a nice topping pattern, very similar to the topping pattern from back here after that nice run up. It's very similar, isn't it? There's the gap up and the steep drawdown. And the thing is, that was a Friday into a Monday, Tuesday, and down we went for a Wednesday. And by the following Friday, we were right back to where we were. In fact, a little bit higher than where we were. There was that Friday close, and there was the Friday close. If we do break the Globex low and get below 42, we'll call it 42.65, there's nothing much here to help us out until we get down to around 42.35. Should be able to move through that zone relatively quick, just like we did on the way up. You can see the shallow area in the TPO, and we can see the shallow area in the volume profile itself. We have the point of control brought up to us now. Remember down here where it was. And on this 10-day chart, we've spent more time here than we have anywhere else. We can see that in blue with the TPO point of control. Yeah, TPO, time, price, opportunity, TPO. All right, so yesterday, as we got into the open, we ran up and hit that VPOC. First touch really didn't work out that well. It did stall around that level multiple times, but I wouldn't give any attribution to the VPOC for that. Now we don't have another one, so we can just take that one off the table. We still have the VPOC from 42.25. That's still down below. And other than that, they're all, the only ones we have left are down below. All right, looking at things on the week, we're basically right where we started, or right where we left off. There's Friday's close, Monday's close, Tuesday's close, and then here we are again today. So in the grand scheme of things, we done nothing. Friday's levels are worth watching. I would keep that high 42.97 marked. Maybe it's 42.98. Let's see what that is. 42.97.75. I would certainly keep that one marked out. Could get a nice first touch play off of that. Otherwise, we've got to get through Monday's high. That is the line in the sand that has to be resolved before anything else. And it just getting there and touching it's not going to do it, right? We need a strong, definitive close above it, and maybe even a pullback onto it to validate that as a new support. It is worth noting that we're still rolling over here, right? If you think about these waves, we're still on the way down. And as you know, it's not always a clean shot, right? Sometimes it gets interrupted. Sometimes, it just turns around and goes back up without making it all the way down. We've got examples of that. But more often than not, it does complete the wave. And I have been thinking about aggregating some of these so that we could see it in a cleaner form, kind of like that blue line that's in the background here. It's a little bit of an aggregation. So with that in mind, we are on the downward slope. We do have an expectation that we are going to reach the 10 and get a little bit of a reset. We're still 1% above the 10-day. So that would imply that we're going to hold the line here a little bit more and let that 10 come up to us, or that we're going to maybe do a little bit of both, let it come towards us as we pull back to it as well. So a little bit more weakness and or a continuation of this pause for at least a little bit longer. If we did consider that the last week moved us really far, really fast, and we were worried about a market needing to pause and digest that move, it's nearly digested, be another way to look at it. It's ready to go, or it's nearly ready to go. All right, so here's my little homemade Monsters of Tech Fang name combo. Since the NY Fang doesn't work pre-market, we use this instead. Kind of bring it out to the hourly. You can see it's kind of that same range that we were looking at in the S&P. Got to get out of that box. It's a little easier on the eyes. All right, so we're looking at everything from Monday on, right? From this big blue candle here, that's the start of Monday, all the way up to where we are now. So in aggregate, all of those Fang names are still pressing against these highs. Sure, it was gapped down pretty hard on Monday, but otherwise it recovered well, and it's hiding right underneath Friday's lows. The thing is, persistence beats resistance. So how many times are we going to kick that door before the door opens up? Or at what point do they just say all of this work is not netting me the reward that I want? I'm not getting paid for my effort and my risk. Screw it. And they start letting go. So one or the other, right? If we're looking at the weighted versus the unweighted, this significant move to the downside for all of 2023. This is like the end of December right up here at the very top, and then we get into January and down we went. This is a weekly chart. So it's showing that SPY as a weighted index is outperforming the RSP as an unweighted index. But we are starting to digest a little bit here, right? Just like we were back here. So if you go back and look at the S&P during, say, mid to late March and into early April, it kind of give you the same impression of what was going on then that we're starting to have right now. A little bit of a capital rotation, a little pause in tech. The question is it going to stick? Right? Is tech really going to back off and we actually do get a capital rotation into other things? Or is tech just taking a breather and then it's going to resume operations again in 6 weeks or so? If so, we're in week 2. It started last Thursday. It's been carrying through. So I guess second week of the candle wise, but it hasn't even been a full week if we were just counting days. All right, this should be fairly self-explanatory. It's the Qs versus the SPY. Down here at this lowest form is January 3rd. It's the start of the year. When the first name on the list is outperforming, this chart will go up. When the second name on this list is outperforming, this chart will go down. The Qs are outperforming the S&P. Tech has been outperforming finance since January. It's not a surprise. We just talked about that on the other chart. It is starting to take a little bit of a pause here, just like we paused in March through April, right? That little bit of a pause. And yeah, I mean, that's a really nice head and shoulders, right? If we were to consider it, but it is a ratio chart, right? So it's not like this is a tradable product. The thing is, whether or not it's a head and shoulders or whether it's just a really big cup and you know that maybe we're going to get a handle, we still got a resistance coming up. And look at the size of the moves in the last few weeks, right? That's getting to be a little bit extreme, kind of implying, you know, a blow off top style capitulation move is coming. There we go. Do that. All right, so we got a continued weakness in Apple. It actually got a downgrade yesterday, which is kind of a surprise. You know, you look at how often Apple gets downgraded, um, but we're still inside day. And if you think about where we closed in Apple, there's a long ways to go to get to the bottom of Apple's price action from yesterday, right? So we got to get it below 177.5 before we could even consider trying to take a short on this thing. Amazon pre-market tested yesterday's highs. I wouldn't be surprised at all if we come back down and test yesterday's lows also in the Globex. This thing is getting pretty exaggerated moves this morning. Nice continuation in semiconductors. AMD already has that inside day breakout and it's keeping it, at least at this point. We still got resistance overhead, very likely from the 30th. We're going to get a little bit of trouble there. The thing about a gapped up market after such a really big move yesterday is that it's nearly a 50-50 dump probability, right? That was a beautiful TRB, and we did exactly what we should have done. We rallied up to the top of the first range. It doesn't owe us this second high, but more often than not, we'll get that second high. The thing is, I would like it better for a long if we hadn't gapped up in the pre-market. Now we've gapped up and I don't really like it as much. The one good thing that the gap up gives us is that now we've got a support level underneath this. So if we were to see a little bit of weakness this morning, fading back to the close of yesterday as a springboard or a bouncing point to continue the move, then yeah, sure. I mean, I kind of like that. So for Apple, I just kind of back up a little bit because I should have done it the first time. You see all these wicks across here over the last few days. They are defending that, right? They are coming in and trying to buy it back out. So are they done, right? Are we going to be able to actually get through that level? Or are they going to continue to heavily defend it? I guess we'll know if we start focusing on this gap. The thing is that gap is so far away, right? It's 175-ish, 175.5. So we do have a channel top that we could mess with from this gap. So that'd be basically 177. If we get inside of 177, we're very likely going to go to 175.5. So at least that'd be a good play too. Otherwise, it would be nice if we could challenge the 50% mark of this really big day, Monday the 5th. So a rally up into that resistance before rolling over, I'd like that a lot better. Just kind of keep your eye on this. It's nowhere close to an inside day breakout up or down. And if we do get a breakout to the upside, it will be that 50% that you want to keep your eye on. Otherwise, we're going to look for the channel top to get broke, and then we'll run to that 175.5. Yeah, you could get away with perhaps, a butterfly on either end. That'd be your cheapest way to go, and or an iron condor. Yeah, I mean, I don't see any reason why not. The thing is though, just be a little bit careful on the volatility. An iron condor is something that you sell to open, and if you get a higher volatility coming in, that trade won't decay the way it's supposed to, right? It's gonna keep its cost, and that just means that you're going to be stuck in it longer for it to finally decay enough for you to get out with some kind of profit. It won't cause you to lose just because of that, but it does expand your time horizon, which expands your risk, right? All right, so Amazon, this is really doing great. It got through this last level of trash and resistance. We did get a gap close. So we'll just steal this line here since it's no longer being used down there. And we'll steal that one too. So we got this gap closed. We could focus on maybe a fade back in that channel to find a little support. $126.28 and then $124.66. Right, that's your channel top and your channel bottom, because that's all they are now that the gap has been closed, is they're just channel tops and channel bottoms. It's this next one, it's going to be a doozy. From having closed way up here at 103.5 to opening all the way down here at 131. And continuing to the downside with almost no wick across the top. It didn't even try to close the gap that day. So 103.5 is going to be the next one that we aim for. It's obviously a long ways off. Taking it out onto the weekly, we're past the 5-bar at this point, so you got to have an expectation of a little bit of a pause. Just remember that it doesn't owe us a pause, and Apple's usually the one that proves that, you know, the 5-bar rule is not set in stone. But there's been a lot of eyeballs on Amazon. It continues to push really hard. So while I'm expecting this thing to pause and digest, there's no proof yet that it's going to do that. And it's still on the march. We are continuing to sink a little lower in Microsoft, which is actually more bullish to me than bearish. Remember, I'd rather gap down a little bit in the pre-market than gap up. So 130, or excuse me, 333. If we do continue to fade, then I'd like to break down below yesterday's low as a bear trap, squeeze them suckers, and then get them to puke and pop this thing back up to 338. That's the game plan. So two-way street, inside day breakout to the downside, bull trap, or excuse me, bear trap, bullfire, rip that thing back up for an inside day breakout to the top side, and a continuation back up into these wicks. The thing is, these wicks show that there's a lot of defense up there, and we don't know that they're done yet. All right, this is really bullish. Netflix is one to keep your eye on this morning. You can see how we closed all the way down here, and now this morning in the pre-market, we're all the way up here. We're looking at an inside day breakout with a red to green flip. This is really bullish. So as much as you can look at something like this and say, ah, man, it's already gone a long way, I don't really want to mess with it. You got the same thing back here, right? Where you closed all the way down here, you opened all the way up here, and then it continued to rally over the next 4 days. That gap up bullish nature alone has a lot to say right now. Granted, this is an earnings thing, right? And then you got earnings here, and then you got earnings here. So when it's just something as simple as that, how far it gets has a lot to do with it. And how far away from earnings are we? Yeah, a little way still. Let's check the news on it then and see. That's from the 2nd. And that's from the 2nd. JP Morgan put an upgrade on it to 470 from 380, keeping the overweight rating. Analysts praise the path to make more money on borrowers. So again, this is really bullish as a pattern, as a setup to have such a red to green. And even though instinctively you're going to see a gap like that and say, nah, I'm not really interested in it, it can continue to run just like it did here, where we closed at the low of the day, we opened, gapped up the next day, and we just ran and ran and ran all day long. That went from like 292 all the way up to 320. Back here, granted, this is an earnings one, but say this one isn't, and it's a down move rather than an up one. Or here where we closed at the low of the day, open, gapped up, and just ran. And look at the follow through over the next few days on the move like that. And the same thing here, the follow through. So it's crazy bullish, right? I'm not saying you should just run right in there and buy a call first thing this morning. But if we get above this wick right here, that 414.5, that'll be your support. It could also be your trigger. We get above that and, we'll take it for a run. Targeting is going to be a little bit of struggle, right? Trying to identify where this thing is going to go, where the next levels are for resistance and maybe where we're going to get hung up. So with that in mind, see that gap is closed. We do have a 455 gap, but man, that's so long. That's a long ways off. 457. I think you're better off using what we've got left, right? So maybe a measurement of this current week and projecting that. So I'm on a weekly chart here, and we just use the quant tool. So 422 would be 50% of the move, and then 430 would be 100% of the move. If it continues to run extreme, then you got 439 and 447 for the follow through, right? Just like the follow through the next couple of days. This whole thing doesn't have to be done in a single day, but I do expect that it's going to last more than one day, and I do expect that today is going to be a pretty significant move. Don't count this thing out. Keep in mind also, it was seeking alpha's contrarian play for 2023, right? When everybody was still bullish or still bearish, the market in general, they were calling for this to be bullish. And I mean, I don't know, if you look at it from January into February, that sucker looked pretty weak, but it's finally getting up and going. UNG is up, which is nat gas. Then we've got financials with KRE, semiconductors, and that's your main ones that are up this morning. Energy's not up enough to hit our benchmarks. KWEB, the China constituents, are down more than 0.5%. We really want to see that flip over if we're going to get bullish. Gold is down. The KWEBs are down. Bitcoin is down. So all of the Bitcoin proxies. And of course, there was that whole shenanigans yesterday with coin. It's like they're just deliberately trying to crash these exchanges. So, you know, they're not down as much as I would have anticipated. I would have thought it would be more of a bloodbath. Liquidity is still going to be the thing to keep your eye on. So TNX, TLT, the dollar index, DXY, lean into it, right? And otherwise, everybody be careful, be safe, and we'll see you all tomorrow.